Bitcoin and the majors experience a pullback as traditional markets give up their gapped up gains. 11 class action lawsuits have just been filed against crypto exchanges and ICO projects from back during yield epic run up in the FOMO, the great FOMO of 2017, just when those companies thought they were in the clear with all of those alleged ill-gotten gains. We talk about the first bank to fail in the new pandemic age, and we break down the markets from the macro to the micro in today's exciting episode of Breaking Bitcoin.
I'm Jonathan Sella with Props, and you're watching Breaking Bitcoin.
Welcome back to Breaking Bitcoin. We are live every evening at 9 p.m. Central Standard Time. This is your evening source for everything markets and finance. I'm your host, Justin Wise, lead analyst and senior mentor at Cracking Cryptocurrency. We've got a fantastic show for you guys this evening. So much to talk about. Today is April 7th. It is Tuesday, Foul Year of our Lord. If you're watching on YouTube, make sure to smash the like button, and you will also enjoy following us on Instagram or Twitter, where we do post exclusive content that you will not see anywhere else. All right, so we've got a lot to get into today, so let's just get started. The first thing that I want to talk about today, before we actually dive into the markets, so let's cover the current events first. We're going to cover the current events, then we're going to dive into the markets today and answer your questions live. So if you guys have any questions, make sure to drop them in the live chat. The moderators will direct my attention to them. So let's head over into the live scene. All right, so here we are in the live scene, and we do have the markets pulled up, but that is not actually the first thing that I want to look at. All right. Got a bit of a delay here on the YouTube. Wow. Good stuff. All right, so the first thing that we want to talk about today is going to be this. These 11 lawsuits that were just filed. Okay, so last Friday, in a Manhattan district court, the largest class action lawsuit in cryptocurrency market history was filed on behalf of investors who participated in ICOs of projects like EOS, Tron, BNT, Civic, Kyber Network, QuantStamp, SNT, Status Network Token. So quite a bunch. And in a series of class action suits, the attorneys who are representing them, there's actually kind of a little bit of a, well, that's Bitfinex, but, you know, just as it typically is. In this kind of series of class action lawsuits, attorneys who wish to represent the plaintiffs in a series of class action suits rather than just doing individual suits for each individual plaintiff, which includes damages. What they're asking for is damages by exchanges such as Binance, Bitbox, BitMEX, and KuCoin. So not just the ICO purveyors or providers of the ICOs or the startup companies themselves, the ones who actually got the funds, but also the exchanges involved as intermediaries. Now, the law firm's lead attorney here is Kyle Roche. All right. So targets of the lawsuits include Binance, Bitbox, BitMEX, KuCoin. Here are the digital token issuers targeted as well. Block 1, i.e. EOS, Tron, Bancor, Civics, Kybercoin, turned into Kyber Network, QuantStamp, Status, and Kyle Roche, the lead partner on the case. Now, he spoke to Decrypt, where we are getting part of the information from this article. And in it, so I want you to keep that in mind as we go over this article, that this is certainly biased toward the plaintiffs and certainly biased against the exchanges. But he describes these particular ICOs as egregious examples of the selling of unregistered securities in the United States of America, which is always the big thing, right? Are these tokens unregistered securities? This meme has gone back as old as time, right? Generally concerning Ripple. As we all know, Bitcoin and Ethereum are proclaimed to not be securities because they are sufficiently decentralized, whereas Ripple, it's, right? We don't know. Now, Kyle does, he contends that the defendants, which would be, obviously, as we've talked about, exploited billions of dollars from investors during the 2017 through 2018 ICO mania, describing it as a form or as a fraud, that is, of historic proportions, historic nature. So in that sense, these lawsuits were, in fact, in his opinion, long overdue. This, in my opinion, though, it's not so much that they were long overdue. It's that this is generally what is inevitable after a situation where anything like, anything like this, like if we look at the $1 trillion lawsuit that's being levied against Bitfinex, it will always come after the fact. Individuals will always come out, whether the lawsuits are frivolous or not, or whether they settle or not. We do have to understand kind of the business nature of the legal system in the United States of America. Whenever there is lots of money exchanging hands, there is lots of opportunities for lawyers to make a lot of money. What's really interesting, and this is, if you go back, there's a really good documentary about how the legal system worked in Rome on YouTube. I recommend you guys watch that. I think you just probably search for, legal system in Rome documentary. And in that documentary, they're talking about how, kind of the concept, obviously we still practice Roman law, right? Our legal system was essentially inherited, from the Roman, and it's evolved over time, right? But it was certainly inspired and constructed by what was formed in Rome with their difference, with the Latin Romans, the Latin legal system, and, to the legal terms that we use nowadays. Many are still in Latin. So, the legal code, what started off as a fairly simple legal code, as most legal codes do, or codified forms of law do start off fairly simple. Eventually, it became more complex to the point where individual careers were started because the law codes were so complex, you needed to hire a professional to be able to kind of weave their way through it. But what's quite interesting, and I guess something that some miss and some do not, is that in the kind of first era of attorneys in Rome, it was not necessarily those who just had their facts correct or just did the best research. It was those who had the most convincing arguments, right? So, this is how individuals like Cicero and them made their name, right? Making very, very convincing and compelling arguments to the public, to the commons, who used to weigh in on the legal system. But that history lesson aside, the legal system in the United States has become so complex that, anybody who's read some John Grisham knows that class action lawsuits particularly, represent this inward cycle of money grabbing opportunities for attorneys, right? Anytime there's something big, or anytime a huge corporation or a big company, has done something in error, guaranteed, if you were a patron of that company, if you bought products and services from them, you're going to get a phone call saying, hey, would you like to sign up for this class action lawsuit? I'm going to make millions. You're going to get a check for $42. In fact, all the plaintiffs, the people who are actually hurt, are going to get a check for about $42. Meanwhile, myself, the attorney, I'm going to get 50% of the settlement because I'm going to take your case on a pro rata basis, meaning I don't get paid unless we win something. But if we do win, I'm going to get a lot paid and you're going to get a little paid. Like, that's typically how the legal system tends to work. That's how the class action lawsuit system tends to work. So I'm not really, I don't really think this is any different. I don't really have a high opinion. Now, again, I'm not really speaking to whether or not investors were defrauded, right? In general, I tend to think that there were a lot of individuals that made money in cryptocurrency in 2017, 2018, assuredly. And I'm sure that there were a lot of individuals who purchased things that they shouldn't at times, that they shouldn't because they didn't have experience in trading or investing in general anyways. But it's not that they necessarily got burned in crypto. They would have got burned trading the stock market, right? They would have just bought back in January, right? They would have bought the local top of traditional markets, and they would be mad and trying to sue the New York Stock Exchange, right? So the only difference is that there's not a class action attorney, this kind of paper train running around signing people up to file a class action lawsuit against the New York Stock Exchange or ARCA. But just wait. Maybe if the market drops far enough. If the market drops far enough, they just might. So anyways, I want to be very, very clear about that, about the financial incentive for who is speaking to these reporters who we are partially reporting about, and two, the financial incentive, obviously, of the counsel for the plaintiffs here in the first place, right? So moving on from that, many legal experts and even the SEC has weighed in on the phenomenon of initial token offerings, right, or initial coin offerings, right? They were initial coin offerings, now they're ITOs, right? Maybe it's a more politically correct term nowadays. Like, we can't say ICOs. We can't say initial coin offerings. It's ITOs now. Anyways, and again, the SEC to many individuals have deemed most ICO projects as illegal securities offerings, right? And, as I've said this before, over time, we are going to see, the SEC come out and get their 5 pounds of flesh, right? Again, of course, anything that happens in traditional markets, as long as you are kind of in the paying scheme of things, right? It's always been my very strong opinion that, yes, certainly the SEC and governmental bodies like that do help regulate some fraud, but they also create a system in which legalized fraud can easily be done, right? It just depends on where you are in the hierarchy of scams, right? Like, where are you in the hierarchy of scams, right? Now, certainly, watchdog companies like that, watchdog agencies, they do good things as far as shutting fraud down, but they, again, create a system where fraud can easily be perpetrated as long as you are kicking money up the chain. Now, the critics, of course, have been saying for years that these companies skirt U.S. federal and state securities laws and that they operate in a legal gray zone while getting rich doing it. So we can talk about probably the most frivolous lawsuit that's going on right now. And again, listen, I am very, very, very outspoken about my criticism about Bitfinex. You guys can go see my video. The truth about Bitfinex and Tether FUD explained by a professional trader, where I actually break down exactly where Bitfinex went wrong, how the entire situation with the Tether treasury and Bitfinex going insolvent and, all the money that was borrowed from the treasury. I go into detail about how that was fraudulent. But the idea that Bitfinex manipulated the run up and the run down based on Tether is pretty nonsensical, right? Go read Reminiscence of a Stock Operator. It's a fantastic book. And the biggest takeaway that you can get from that is you cannot, it doesn't matter who you are, cannot manipulate an entire market, doesn't matter how much money you have, in the direction that it doesn't want to go, right? Whales cannot move, like whales can move the market, right? You see a big wick, you're like, oh, maybe a whale did that. That's a fat finger. You do not move price from 3,000 to 12,000. Whales cannot do that, right? You cannot manipulate a market in the direction that it doesn't want to go. You need retail investors, just like why does Wall Street pick the pockets of Main Street, right? Oh, because they want that, because that's the target, right? They need to move the money from the pockets of retail investors into the pockets of institutional investors. That's how the game works. That's how that's how that particular game works, right? It's traditionally how markets work, right? Or the concept around traditional markets, which is why we spend so much time here advocating why we do not trade like retail, like retail traders. We do everything that we can to put the statistics in our favor to trade, and not just like professionals, right? Because they trade their own strategies. You have to trade a strategic, rules-based system. That is the best way to ensure success, right? If you just, follow the news or, buy like other individuals buy, you're going to have the same, generally the same results as other individuals, right? So the Roche law firm is also working with another New York law firm, and that's Selendi and Gay, who was behind and is behind the legal action brought against Bitfinex back in January in their Tether market manipulation suit, which is again a pretty frivolous lawsuit to attempt to sue Bitfinex for I think they're trying to claim like $1 trillion. And the idea that Bitfinex is responsible for the entire run-up via the Tether treasury is ridiculous. But while there are material differences in each claim against, each token platform or exchange, for example, what they all have in common, according to Roche in their original claim, getting back over here to the real article that we're talking about, what they really have in common is that all of them, according to Roche, solicited United States citizens to buy unregistered securities as well as sell them inside the United States, which, is kind of the linchpin, right? Now, what was noted is that all of the tokens identified in these complaints are ERC-20 tokens, which is to say Ethereum tokens, which allowed these projects to easily build and distribute to these distribute these newly minted digital shares. So, we could put, how much blame for this can be laid at the feet of the Ethereum community potentially for creating such an easy way to build up and spin up what was most likely never going to be something that was going to be fantastic. Again, a large majority of crypto projects are not going to do well for investors, right? A good portion of them are going to, right? And that's, again, something that we attempt to discern and determine. But at the end of the day, you have to pick your winners and your losers. But to answer my own question, I really don't think a whole lot. I don't think a whole lot of blame or any actually can be laid at the feet of Ethereum. This is just a natural part of technological evolution. You have Ethereum, which gave the ability to create something, and who is going to use technology? Who's going to use technology first? It's going to be, criminals. Criminals used fast cars first. I mean, the entire world of racing evolved from bootlegging and moonshining back in the early 1900s because the United States government thought that it was a good idea for temperance. The temperance movement became very popular, and it was a very good idea to attempt to outlaw and criminalize alcohol, just like they think it's a good idea to outlaw and criminalize current narcotics, which is not a good idea. In the future, governments will realize that narcotics cannot be regulated, or that it is counterproductive to do so. The governments will make far more money deregulate them. But again, one would argue, I think that societies would be richer if governments stopped wasting money on chasing drug wars, but perhaps individual governments and governmental agencies would actually not be richer because they're able to extort the taxpayer, they're able to extort drug cartels. Moving on from that. The ERC20 token standard also made it easier for exchanges to onboard users to their platforms and begin listing and trading these tokens, right? And offering them in a very readily available fashion. And as Roche characterized it, the proliferation of ERC20 tokens allowed the 42 defendants named in the lawsuits to take advantage of investors to the tune of billions of dollars. And on top of that, the defendants exploited investors' enthusiasm concerning more legitimate projects like Bitcoin and Ethereum, was responsible for luring in people who didn't fully understand the technology that they were investing in, is their claim, which is certainly true, right? I've talked to so many individuals, for example, who are in the space and, like me, are passionate about decentralization, are passionate about Bitcoin, really enjoy the mantra, the ethos of decentralization. They want to see the world a better place. They believe that decentralized cryptocurrencies can get us there, that projects like Bitcoin can get us there, that hard money and sound money can get us there, that modern monetary theory is not going to work, that the debt actually matters, that the debt actually does come paid, especially when you have this, kind of worldwide situation. When you have worldwide economies, when you don't have one world government. I think MMT would work great if there was a one world government, but I want to do everything in my power to push us away from that, right? Some people think that the futuristic, human civilization of Star Trek looks awesome. I love Star Trek, but that civilization terrifies me, right? One world government terrifies me, as it should. I think most people, because I don't think they understand what they give up, right? Human freedom and liberty necessarily implies more decentralization. Now, but that is true, right? I have mentored so many individuals in one-on-one mentoring when it comes to, hey, can you take a look at my portfolio, right? What do you think I should do about these, right? I bought these, I bought a lot of these altcoins when price was really high back in 2017 or early 2018, and I'm just holding them, right? I've just held them all the way down. What do you think I should do? And what's obviously that's going to depend. That depends. Every situation is different. Every individual, it depends on their confidence, what their time horizon is, what their actual faith in these projects are, what their current demands on capitalization are, but regardless of what the answers to those questions are, it's almost 100% of the time, those same individuals are still extremely passionate about cryptocurrency and the ethos of why they're here and the mission statement and making the world a better place and and dissolving the Fed, auditing the Fed, all of this stuff, and it's really cool because you bring together cypherpunks, you bring together libertarians, you bring together socialists. I mean, you bring together all sorts of different people from different walks of life that can't agree on one thing, and that is that hard money is the path forward, and that Bitcoin represents the greatest form of sound hard money that we could possibly have, and that will allow us to have a much better future and economy for everybody, regardless of what economic system we incorporate or subscribe to, or what sort of governance system that we subscribe to, right? And what's really interesting, this concept comes from, I'm a big, good, friend of the show, Ansel Linder over at Bitcoin and Markets. Go check out the interview with him if you haven't watched that. In one of his latest episodes, he talks about this idea that, that with a more efficient monetary system like Bitcoin, what we have the potential to have is a new renaissance, right? Where all of the time and energy that is being consumed right now by, governments and central banks and individual investors and hedge funds and professionals and legal systems and everything, all of the energy, which is all based off human time, right? At the end of the day, the most precious commodity from our perspective is time. It is finite, Every individual only has a certain amount, and it is infinitely powerful because human innovation, human intelligence has given us everything on this planet. It has allowed us to build planes, trains, cars, automobiles, guns, machines, potentially artificial intelligence, Bitcoin itself, fractional reserve lending, skyscrapers. Human intelligence and intuition and human consciousness has built all of that, and all of that stuff obviously requires consciousness and to be alive to do that. So at the end of the day, human time is the most precious resource, and doing anything that we can to preserve time. And this is why, if, for example, you look at the stuff that I talk about, if you look at what CEOs talk about, if you look at what the most successful humans talk about, what is most fundamental to their success, generally will be something along the lines of time management, efficiency, and discipline. Because at the end of the day, your capital is your time and your intelligence. That is your capital. That is the most valuable asset that you have to offer to other individuals, to potential partners, and to the marketplace. That is your most valuable asset that you have to offer, is your human capital. And the renaissance that we can have by taking all the time that is put into trying to keep together a patched together, shoddy, unsustainable monetary system, and if we adopt a hard money system like Bitcoin, all of that time and energy can go into producing actual goods and services and value for human individuals and improve the quality of life for men and women on the face of the planet, right? So I know I just assumed some genders there, but hey, it's Tuesday night. So I think that's a really important point, right? I think that's a really important point, and one that he makes quite well. So with that being said, now, obviously the idea that individuals were misled into thinking that they were purchasing a decentralized cryptocurrency without actually being aware if it was in fact decentralized cryptocurrency or a security created through a centralized process is something that we've talked about here a whole lot. And of course, some of those investors lost a lot of money. Some made a lot of money, right? So where does the blame lie on? Does it lie on the exchanges? Does it lie on the token offering? Does it rely on the individual investor, right? Is it the offering company's fault that their project failed or maybe sucked to begin with? Now, this article does go on to present United States-based exchanges such as Coinbase and Gemini as not getting tangled up in this drama, thanks to their rigorous compliance and regulatory departments, which ensure that they comply with federal and state laws. So again, that's a good plug for Coinbase there. If you guys want an exchange that you could really reliably and safely trade on, it's Coinbase. Oh man. By the way, we got the Coinbase link working again. So if you guys, for some reason, watching cryptocurrency channel at 9 p.m. Central Time on YouTube, I mean, you guys all got exchanges. But if you haven't, you guys can go. We got the link working again. It's coinbase.krakencryptocurrency.com. You'll get a free $10 when you sign up. We got that back. So I lost it for a while. Anyways, but it also pours on the blame. This article and this lawsuit, it pours on the blame for the exchanges named in the complaint, right? Accusing them of making fortunes on the trading fees, as well as allegations of extravagant listing fees. And of course, we know the listing fees happen. Binance receives large cash payments from token issuers seeking to list tokens. This complaint asserts that they're in excess of $1 million per listing. And again, we've got good, we've talked about that for a while. We've got good evidence that about $1 million per listing is about the standard for Binance, right? That's what's charged by the Binance exchange to list projects in the first place. And that's probably gone up. It's probably gone up, right? Now, these individuals, the law firm here, do insist that they are strong believers in crypto and blockchain technology, but fundraising for these projects must be done in a way that respects the regulatory rules. By the way, if you guys get a chance, make sure to go check out this Medium article. If you follow through this link on the Bitcoinist, it will guide you to this Medium article about why Andreas endorsing the law firm pursuing the $1 trillion case against Bitfinex is a problem. It's a pretty well thought out article, I think, in the end. It's a pretty well thought out article. So, the question is, how do you guys feel about this lawsuit? How do you guys feel about this topic in the first place? If we look at some of the tokens named in this complaint, We can see that they saw a major run up in 2017 and early 2018 before crashing, most of them more than 90% for the great crypto winter of 2018. Now, many investors walked away feeling burned. And if you're among them, be sure to leave a comment down below. Be sure to leave a comment down below. And the next thing I want to talk about I'm going to be talking about our Bitcoin trading competition here in a little bit. But of course, if you guys are watching, you enjoy the content, make sure to smash the like button. It really helps us know that you enjoy what we're doing. And of course, if you guys are among us and you want to learn how to trade profitably and successfully, make sure to join our community. Find out exactly what we do, premium.krakencryptocurrency.com. Next thing that we're going to be talking about today is the first bank to fail in the pandemic. Here it is. I would not like to join the industry's best crypto trading channel. That's what I do. So, so the first United States commercial bank to fail during the economic fallout of the coronavirus has been announced, right? It has happened. The FDIC, that's the Federal Deposit Insurance Corporation. I have words, but they protect assets on deposit at domestic commercial banks, right? So they're the ones that make sure that if you deposit money into a federally insured bank account, that you actually get your money back should the bank go belly up, right? If there is a bank run, if the bank goes insolvent, right? Now this isn't available on all things, like for example, a lot of money market accounts or anything where any kind of checking account where we're not checking accounts are usually FDIC insured, but savings accounts, a lot of these high yield savings accounts are not going to be FDIC insured. And the reason why is because to give you that high yield, they actually take more risk with your money, right? So you want to kind of pay attention to that. Obviously, Wealthfront and Robinhood and a lot of traditional high interest accounts have taken a big hit. Citi, on the other hand, has a 1.67% high yield savings account. So definitely not any recommendations, but pretty good idea. I've migrated from Wealthfront. So, but Wealthfront is good for its own reasons, right? Now, now the first defunct, or what's the now defunct First State Bank of Barbersville, West Virginia, is the first bank to take a belly up. Now, the bank was holding about $140 million in client deposits. And when it failed, resulting in the FDIC stepping in and protecting the accounts. By protecting the accounts, that of course means making sure that consumers' deposits were honored. Now acquired, so this bank in West Virginia has been acquired by Fairmount, West Virginia's MVB Bank. Now, the closed branches of the First State Bank will eventually reopen as MVB Bank branches, and clients will have access to their accounts restored, said the FDIC, right? So that's how it's going to work. They're going to have new accounts with the MVB Bank. Their original accounts at the First State Bank of Barbersville, West Virginia, are going to be gone. Now, the idea, but the bigger point is okay, obviously, so what? Well, this is a big idea, because the idea of bank failures, though, hardly, at least for us watching, you guys watching this channel, is hardly going to come as a shock to you, but it is going to come as a shock to individuals who are new to this idea. All right. When even well before the current economic crisis, cryptocurrency fans and gold bugs alike were warning of a run on banks sooner or later. Now, in the case of this state bank, the story does have somewhat of a happy ending, with the FDIC stepping in to make sure that the good people of Barbersville had their deposits protected. But what would happen if a dozen or more banks happened to go under together? With many financial institutions already troubled going into this crisis in the first place, what happens when the economy, and if the economy, really contracts? And new regulations enacted earlier in the crisis now allowing U.S. banks to effectively and literally have 0% reserve requirements, the Federal Reserve and the FDIC have desperately been asking Americans to not cash out of their local banks, insisting that their money is safe and that they have an infinite amount of cash to protect everyone's account. And with the money printers going brr, and with uncertain economic conditions, maybe depositors have good cause to worry. And this provides us an opportunity to learn about financial sovereignty and what it means to directly own one's money through the use of gold or through the use, better, of Bitcoin. The Bitcoin narrative is one of an alternative, honest banking system. And the current economic uncertainty makes a serious case for alternative solutions to what is quickly becoming a liquidity crisis in traditional banking. If the situation over at First State Bank is just the first sign of what's to come for commercial banks, and as the lockdown drags on and businesses go under, Americans might get anxious enough to start rushing the banks to continue to withdraw cash. But at the end of the day, I want to know what you guys think. Do you worry at all about your money on deposit at the local bank during times like this? Do you take comfort in the Federal Deposit Insurance Corporation? And do you trust your accounts are secure? Are you among the Americans who have rushed to withdraw cash in the month of March over concerns of an impending financial crisis or collapse? What sort of assets are you holding in your buried out tin, ammo box buried in the backyard? And, let us know in the comment section down below. All right. Now, the last thing we're going to talk about before we get into the markets is going to be related. So we're going to talk about Bitcoin spot trading volume, right? So spot volumes on Bitcoin's markets dramatically overshadowed the derivatives markets in the outgoing month of March. This is at least according to a new report from the analytics company Crypto Compare. And this is pretty relative because derivatives drive cryptocurrency, right? We've known this for quite a while, right? Derivatives drive cryptocurrency, but not over the month of March. There was more spot transactions. There was more spot trading in the Bitcoin marketplace, not crypto marketplace, but just Bitcoin marketplace in the month of March, which is extremely significant, as that means that there was some serious spot rebalancing going on, some serious spot rebalancing. When global financial markets were rocked with high volatility as fear, uncertainty, and doubt over the pandemic overtook the market, it unfortunately had the effect on the Bitcoin and the wider crypto market as well. Obviously, this played out with the Bitcoin derivative sector taking a hit with investors. However, the spot market volumes told a different story if we analyze. Now, Crypto Compare here describes how since late March, there has been a steady rise in the price of Bitcoin when it reached the $6,000 level of support. Increasing spot volume and demand drove the price to this week's current high. And at the same time, volumes on derivatives exchanges were floundering, right? Again, so just to make sure we're very, very clear about that, what that means is that there was more individuals watching Bitcoin's price saying, man, they got the SPY, they're looking at the SPY, they're looking at Bitcoin, they're looking at the SPY, they're looking at Bitcoin. And they're like, what's that hotline bling meme, right? You do the hotline bling meme, hotline bling meme. There you go, right? And they're like, okay, I got to get me some of this Bitcoin. Spot Bitcoin. And if we look at the charts, we can see, let's see, do they? Yeah, so if we look at the charts, these are provided by Skew in this article. Looking at the charts, we see open interest and volumes for the CME Bitcoin futures market declined sharply after the flash crash toward the end of March. And if you were wondering about Backed, a similar trend was also noted in their volumes on Bitcoin futures derivatives markets. Now, apparently, or obviously, I should say, this indicates increased interest from retail investors, with Coinbase, for instance, having recently revealed that their brokerage metrics showed retail buyers were buying in hard during the March crash, and that Bitcoin was without a doubt the crypto of choice amidst the chaos, right? As everything was tumbling, where did individual investors turn to? They turned to Bitcoin, and Coinbase's metrics and Skew's metrics, these all point to the exact same thing. Coinbase said that they typically see customers on their platform purchasing about 60% more Bitcoin than they sell. However, so again, Bitcoin is extremely bullish. Even by default, they said that on average, retail buyers buy 60% more than they sell. However, during March, and the price drop across all markets, this figure jumped to 67%, describing it as customers taking advantage of market troughs and showcasing strong demand for this crypto asset, even during extreme volatility. This is in contrast to institutional money, which seems to have shied away from the big derivatives platforms available on CME or backed. In fact, Crypto Compare says that its data shows that trade volumes on spot exchanges surged in Q1 of 2020, with the majority of new volume coming from what they termed lower tier exchanges, accounting for $54.3 billion of the measured volume, while so-called top tier exchanges totaled about $21.6 billion, right? So, meaning that individuals like retail investors who are just like, hey man, where are you buying your Bitcoin? Oh, I'm buying it on KuCoin. Bam, right? They're buying it on Bitcoin. Now, additionally, Binance was the largest top tier exchange by volume in March, trading $63.6 billion and up by 19.2%, followed by OKEX, which traded about $47.7 billion, and Coinbase trading $13.3 billion. Binance and OKEX led the spot volumes markets, but their dominance wasn't limited, however. The two platforms outperformed the long-standing leader, BitMEX, in terms of Bitcoin futures exchange volume figures. Meaning, now, obviously something that we could draw from this, right, is that, obviously we cannot deny that there was increased retail demand for Bitcoin as price dropped, right? However, one could also assume that it was BitMEX, what's the term we use loosely here, screwing the pooch with manually shutting down their exchange as the liquidation engine. We covered this before, the truth about the BitMEX liquidation engine and how that actually went down. We've covered that previously on the show. But again, we can look at where the CME markets went down. Bitcoin's price really did not want to go down below 4,000, right? Really didn't want to go down below 5,000. I mean, that's why price bounced back so hard, because it was an unnatural movement to the downside. Like, not a natural as in like a lot of people selling, unnatural as in like you have this irrational machine that is attempting to take price to zero and certainly will, because there's not enough money on, there's not any money on the buy side, because it takes time to clear deposits, right? Now, this report also revealed that exchanges that charge traditional taker fees constituted about 80% of the total exchange volume in March, while those that implement trans fee mining, TFM, don't get excited people, represent less than 20% of total volume. So very, very interesting to see. A very bullish case for Bitcoin. Definitely a bullish fundamental, guys. So let me know down in the comments section down below, were you guys logging on to Coinbase furiously as you saw price drop below 5,000 saying, I got to get me some of that? Or were you logging on to Coinbase furiously to say, I got to get out, I got to get out, I got to get out? Please let me know down in the comments section down below. I certainly hope it was the former. All right, guys. Now, we are going to go to the markets. Of course, we are going to be, let's see. The first thing we're going to be doing is checking in with our trading competition on Bybit. All right, this is a 4-week trading competition. We've got Crypto Stofi in the lead, Rhino Trader coming up behind him. Good results. Yes, I am just chilling right at about 3%. That's where I like to sit. Last couple days, I'm at about 3%. But if you guys will notice, just been climbing up there nice and slowly. I'm leading by example, ladies and gentlemen, with the strategy that I'm running on this contract with this account. All right, let's see here. Got Crypto Moses, Mr. QC. All right, so pretty good. An overwhelming majority of the leaderboard, again, about half in the positive. Only a few individuals that seem to have kind of taken a little bit too excessive risk and gone to the downside. But again, may they rest in peace. Of course, guys, if you guys want to trade on Bybit, you guys certainly can. There's a $90 margin bonus. Make sure that you guys utilize the exchange responsibly. I have to say that it's the best option for individuals like myself who want to hedge and use advanced order features. But if you guys are new, certainly learn and understand what you're doing, which you guys can with our education. That's what we do. But let us take a brief scene from Jason, see how he enjoys using Bybit, and then we'll hop to the charts for today's market analysis. Can't catch a break over on BitMEX with all the wicks? Try a better alternative at bybit.crackingcryptocurrency.com and rest easy for a change. All right, and we are back, guys. Hopefully you guys are doing well. It gets me every time. All right, so here we are. We got the live scene right over here. Interesting, nice little attempted sell-off, and this was exactly, this is exactly what I was saying to the guys in the production, in the production room right before we went live, right? Looking at price, kind of interacting with this. With today's point of control, and a high majority of the time when we, after a significant movement, we come back and retest the previous day's point of control, right? But that's neither here nor there. Let's start off on the daily time frame. Daily trend is still bullish. We haven't flipped the continuation filter to the downside on traditional candles, nor have we put in a bearish Heikinashi. We haven't flipped Heikinashi to the downside either. So the trend remains strong. Modified Minx is still pointing up. We're not quite yet toward overbought territories on the daily. So overall, price is in the upper area. This is generally a sell. This is generally not a bad selling area. We're certainly not at market lows, but we're certainly not overextended. Price certainly has room to go to the upside. We've had a nice little kind of sell-off and movement down to the downside today. Looking at the 4-hour time frame, we can just see right now we were overbought. This is exactly what I said last night, going into last night's episode. We were overbought on Minx on last night's 4-hour time frame. And we talked about, again, areas to potentially look for profit taking. And we've had this nice kind of relaxation back down. We have not recovered from overbought conditions yet. So again, remember that Bitcoin is a strongly trending asset. We can continue moving to the upside. But again, the 4-hour time frame would have you flat and neutral right now. There's no continuation signal. It gave you a good, ample opportunity for profit taking opportunities here on the 4-hour time frame. So meso time frame traders are most likely flat, and they're looking for continuation either in the form of resistance breaking here or an objective signal from their primary initiator, right? Their primary initiator, which for me on the 4-hour time frame would not be signaling here. You can see that my confirmer is just basically gone flat, and I am I'm not in a buying area here on my initiator here on the 4-hour time frame, which would be Minx. Looking down at the lower time frames, what I would expect to see, as we can see, we consolidated at today's current point of control in oversold territory here on Minx on the lower time frames. I would expect to see price come up here and at least attempt to make a push for yesterday's previous point of control at about 73.50. It's actually sitting up at about 73.67. 73.75, but that's what I would expect to see. Should we go ahead and break this low, and we can kind of see this again on Bitcoin. On Ethereum, it's a little clearer, but again, we put in a low, we put in a little bit of a higher low, and that is some good, nice. Again, the double bottom's pretty easy to see here on Ethereum. Again, it's pretty clear here. This double bottom with a little bit of bullish divergence here on Minx, and we are just kind of now recovering from oversold conditions here on the 15-minute time frame with a few reversal buy signals here on the 15-minute time frame. For Ethereum here, I would expect to see price, again, similar to Bitcoin, come up here and try to tag yesterday's point of control at about 172.50. Similar for Bitcoin, I expect to see us move up here to about 73.50, right? And that is going to get invalidated, obviously, if we close down below today's point of control, which is currently sitting at 71.75, or should we break our current level of support at 71.09. Again, remember on the daily, we haven't gotten any exit signals. We are still trending to the upside. We are, however, again, I do want to put people on point for this. We are entering into a little bit of getting close to being overextended. We're not overextended yet, but again, so taking profit around this area and looking for an objective reentry signal is fine. The daily is not telling you to do that. The 4 hours already told you to do that a while ago earlier today. You would have an opportunity to not have to sit in a long for a 4-hour meso position through any 4-hour potential drawdown, right? So the daily is bullish, getting slightly overextended. The 4-hour chart is flat, and the 15-minute chart, I would expect to see a pop to the upside was the trading opportunity. Now, Bitcoin on the Renko, for those who are using Renko for their initiation here, which I know a lot of people are, Bitcoin on the Renko, and this is my 2.25% strategy, range strategy on Renko. We never flipped bearish, right? We never flipped bearish here on Renko, so that's good. Ethereum, we did. We actually are still on Ethereum. On Ethereum, we did actually flip bearish on the Renko chart. That is confirmed now. This candle has closed. So looking for, Ethereum would have you out of a position potentially. Not flipping short. I don't really like that whole sell on a red brick, buy on a green brick. Again, there is confirmation here. That's what I don't have because that's a little personal, but Renko would have you not in a long anymore on Ethereum, and Renko would still have you long and holding on to your Bitcoin position, which is not a bad hedge, right? Not a bad hedge. Let's see here. Looking to traditional markets. All right, looking at traditional markets, this is going to be pretty similar from the SPY to the NASDAQ to the Dow. I mean, obviously they're all moving in fairly in lockstep, and the big difference for us as ETF traders is looking for, obviously which one makes the most sense from a risk reward perspective, right? Because of course, if you're trading if you're buying the SPY, I mean, it's $265 a share, right? It's $265 to buy 1 unit of that ETF. Where you could get something like, for example, what I'm actually trading, which is going to be SPLG, and that's $31.12, right? And you're still getting that access to the S&P 500 upside. For example, the other ETF that I'm enjoying trading right now is the FXI. This is the China Trust Large Cap, and then of course the DIA. There are better alternatives to this as well. For example, the DIA is $226.60 a share. It's going to be your spider Dow. The other thing, of course, if you're looking for the Dow long and you want to get in at, the DDM, this is going to be by ProShares, the same individuals who are responsible for SH and SDS. This is just they're like VanEck or Vanguard, not VanEck, Vanguard. But DDM is, $31.59 a share currently. So a lot of different opportunities. And there's, UDOW as well, which is also run by ProShares, 4505. So the ability to get that long exposure in ETFs, if you're an ETF trader, as I am, and not have to pay those exorbitant fees. But with that being said, let's take a look at the SPY. Again, the SPY did gap up pretty nicely today, but again, sold all of those gains back. I'm not necessarily concerned about this. I don't view this as the reversal that everybody thinks that it is. We haven't even formed a lower low yet or anything like that. We have formed a higher. So currently we formed a higher high, and the last thing that we had was a higher low, right? So really, we don't really know anything that's going to happen with the SPY just from a price action analysis point of view until we end up breaching 206, 207 down here. As far as traditional trend, the way that I would evaluate this, again, the SPY broke above the continuation filter, broke above the breaking Bitcoin initiator back over here. That was a fake out, or again, not a fake out necessarily, but did tell us to had one, of course, this isn't a trade that we entered on, but had one entered in this area, Parallax was in bullish force, had one entered in this area, they would have had to exit at a small loss, wait, and then again, getting the continuation over here. And that's exactly what it's designed to do, throwing that jab and looking for that entry on the SPY. So again, I have to say, looking at the charts, I do have to still be bullish here, right? I do have to still be bullish here. Looking at Minx on the daily here, we are just breaching into bullish territory. We just now got this crossover, right? After signaling for the reversal over here and trending upwards nicely. We did just break above our current level of resistance. And what have we done so far on today's close? We've pulled back to test previous resistance, which we would attempt to hold as support, right? So for any trader right now, I think just trading this current price action, they would most likely be long and looking to be exiting their trade should we get a daily close below 207. It just seems to be the way to do it. Now for me, I'm going to be a little bit more conservative. Mine's actually sitting at 216.20 here. This is the Dow again. But, oh, man. I like how I did that. Close. Almost was right on the numbers. All right. Sorry. So 243.90. 243.90. This is the SPY. That was the DIA. So on the SPY, 243.90. I knew it was something wrong as soon as I said 206, right? But again, very similar charts. The only thing that's different. Obviously, I wasn't trading the SPY on that wick to the upside, but I know the difference between the two charts. So anyways, moving right along. Same thing. Still have to be actually bullish on traditional markets. And again, that necessarily means being bullish on Bitcoin as well, because it's just tracked traditional indices pretty closely, right? I think the meme coming out of individuals is that pretty sure it's going to be added to the index anytime now, right? Taking right over for Apache, right? The Qs are going to be the same. Again, the DIA is going to be the exact same. The Dixie is actually getting a little bit of a pullback today. This is exactly kind of what we talked about yesterday. We drew out these same two lines. We came back and retouched our previous resistance over here, which we broke above, broke back down below it. And this is the rounded retest. Not really a BBC. This is more of a rounded retest to me and getting a nice kickoff off that same level on the Dixie, as we talked about, showing some strength from the dollars. Now, what's interesting is it seemed, again, kind of with this pullback, and you can see the pullback from the Dixie here. But, what's interesting is that it's like there's just a bunch of sharks in the water, right? And they hinted some weakness from the dollar, and they snuck in to strike, right? They snuck into strike. Which is why, by the way, going long on some Forex pairs against the dollar, which is exactly what I did, I think was a great hedging strategy, right? Especially when having long exposure to markets, not only just Bitcoin, but not just Bitcoin, but traditional markets as well. So going long some forex pairs trading against the dollar, I don't think was a bad. Actually, I think it was a really good idea. It was a great opportunity to hedge up and protect ourselves against that risk. But we'll see. We'll see. Not getting some. The little pop off on the Dixie is good. Closing below 99.91. I would say inherently shows some weakness on the dollar, and we might be looking at that as a potential opportunity to reevaluate. Again, gold having a little bit of a pullback as well. This is the CFD on a Wanda. Again, getting a little bit of a pullback today, but so far not really selling off. The sell-off is not significant. This doesn't really scare me. Same with silver. I'm still long on Zag. Zag hit my first take profit today on this wick to the upside. So now my stop loss is a break even, putting my silver trade in a no loss situation. So overall, I think that we're pretty good. Old Bentley crude over here. Again, like I said, we're going to see 38.14 before we see 18. That's just the way it's going to be. So saith me, I guess, right? So saith me. Look at the ES futures as we kind of trade into the night. Again, not getting the same push to the upside as Bitcoin. But what do we see here on the ES futures? On the LTFs, nice double bottom. Do we have? Yep, we certainly do. Have a little bit of bullish divergence here on the lower time frames for the S&P ES. Not super significant, but of course, if we go to the daily, same thing. If we look at the SPY, yep, we didn't really. This isn't really bearish to me, right? So. But, honestly, we're going to end up closing right around here. I mean, if we continue to push from here, then we're going to gap up, and the SPY is going to gap up. All right, we talked about Bitcoin, we talked about Ethereum, we talked about Renko, we talked about SPY, we talked about traditionals. Let's see here. Oh, I do want to talk about VIX. Right? So this is the SVXY, which is the inverse ETF for the VIX, right? So essentially speculating that the VIX is going to decline, right? So this going long on the inverse VIX, which is actually what I am. Well, I am long on the inverse VIX. Typically, it's not a hedge. It is a going long on the VIX is a hedge typically, but going short on the VIX is like the opposite of hedge. This is a way to kind of compound a long trade to the upside with a little bit of offset. If you're going long in traditional markets, depending on the market conditions, because you will often see, and this is the exact same thing in cryptocurrency, you will see uptrends proceed as volatility begins to lower, right? Volatility often spikes in periods of high, this sounds silly. Where does volatility come into the market? When the market is fairly uncertain, right? When the market is fairly uncertain, and when the market reaches extremes, right? Either that of greed or that of fear, right? So this will often result in a quick shift, a shift in trend from one direction to the other, or which is the top or bottom of a movement, or at the very beginning an initiation of a trend. You want a trend to be initiated on high volume and high volatility, otherwise there's not going to be a lot of follow through, right? So we want to be very cautious about trading into trending movements or trending initiation movements without volume or volatility confirmation. The SPXY doing the exact same thing, VIX rising up a little bit today as we saw this pullback back to the top of current resistance support. So we're going to need to see a couple more days of data to see how this proceeds. But again, I don't see a trend flip yet. I don't see a trend flip yet in traditional assets. I don't see a trend flip yet in Bitcoin. Now, Bitcoin is a good leading indicator because, again, we are getting closer to that area. But again, I do think that we have quite the potential to put in the rest of the week for potential upside before Friday, potentially marking the beginning of a more dramatic pullback. But again, that's going to be dependent on what the market does, right? As a trend following trader, I look at price and current price only, tell me what to do things. And that's exactly what we do by educating individuals on how to watch current price for objective signals. All right, that's about all I got, guys. It is 9:56 p.m. We did it, guys. We did it in less than an hour. Let's head over to Q&A section, see if you guys have any questions for me. They say, drop lemons in the basket. Okay. We got the pie guy. We got Robin from the hood. I see you guys over here. Man, what's up on, I didn't see, I haven't seen your guys' messages, man. So let me kind of scrub through these. How do I feel about Dash's use case? Listen, I don't have anything against Dash. I kind of do, but I don't really. I mean, I've made my kind of opinion about Dash pretty well known. So listen, it seems to be a sound protocol, but I certainly think that there are much better potentials for money. Last night somebody asked me about Grin and Beam, so I went and did. I wanted to kind of confirm. I don't like to speak on things that I'm not that I don't feel super up on, right? So I had been an early supporter of Grin, right? Not so much Beam, but an early supporter of Grin and the Mimblewimble protocol, and or it's at least its implementation of confidential transactions on Bitcoin. And I really like Grin. I love the grassroots movement. I get why Beam is doing what they're doing. I like Beam as well. They're going for the Zcash approach where they actually have developer funding, which, Naomi Brockwell talked about. That's a very important point. Like, how do these projects actually get funded and developed? Like, people think that, Blockstream is this evil, amorphous, anti-cypherpunk, evil statist influence that is designed to destroy Bitcoin. But the reality is, listen, if you guys want work done, most open source projects are funded by corporations, right? A lot of open source development is funded by corporations. Microsoft, Google, Apple. I mean, all of these individuals fund open source development. Most notably the Linux kernel, right? It's not, it takes time and energy and intelligence to program these things, which are so fundamental and used by so many individuals. And most individuals just don't have the ability to code for free for their passion project, right? The really talented programmers will get funded by the company that they work for to work on their passion project, right? Because it makes them happy, right? Because then they'll turn around and they make a whole bunch of stuff that makes the company money. That's how it works. Harmonic Beat, thank you so much, my friend. I think you're Harmonic Beast over here, though. You're beasting it, brother. Give me those lemons. Yeah, I know YouTube comments aren't showing up in here in DLive. It's like we're all segregated. And then China steals it. Man. Rough. All right. Yassine says, I'm not from the United States, so I don't have the privilege to buy assets like gold and silver. Owning a gold bar is punished by law. And the go-to asset is real estate. Bitcoin is not a state. Yeah, I mean, that's as old as time itself, right? Like, what's the oldest safe haven, for example, particularly in the Indian subcontinent, is cows, right? There's that's what it is, right? That's property that you can actually hold on to. Metal, even industrial metals, steel, stainless steel. These are things that individuals have held on to as wealth sinks, right? As wealth sinks, things to sink their wealth into and hold on to as stores of value, right? So, yeah, that doesn't surprise me whatsoever that in a country that regulates the owning of actual precious metals, surprise, surprise, that the asset to go into would, of course, be something that is more hard, right? Real estate, relatively hard. Still more volatile, again. In more extreme examples, we can see this, for example, in a lot of impoverished nations. When the economies of these countries get really, really bad, they look to own things like livestock. They look to own things like, construction material. They look to anything that they can buy that will be sellable as a valuable asset later on in time. And, this is a really inspiring opportunity for individuals to kind of look out and think, uniquely of their own way to diversify. Like to most Americans, the only thing, like the only way they know how to diversify is to buy other long correlated stock market assets, right? Or to buy gold, or to buy Bitcoin. Like there are certainly other ways to diversify your wealth and your money, right? Like obviously individuals that bought a ton of N95 masks with their savings and then turned around and tried to sell them on Amazon, they were certainly trying to diversify their portfolio, right? Like I'm not commenting on whether that's a good or a bad thing, right? That's kind of a complicated thing. But there are things that you can do, right? There are long-term investments you can make that are non-traditional, right? Go buy a ton of shingles and then sell them during the summer. Just things to think about, right? Things to think about. There's so many ways out there to make money. Tony Clark said, I got some cash, but only because you said to. And anyone as bald and beautiful as you, I'm all about that. I'm all about that money. Thank you, man. Dry cough? Yeah, it's dry cough, man. We're cerveza virus free up in this house. But, just in case, you guys might want to back away from the computer, right? Like, if you guys are watching on mobile, like, don't lean too close to the screen. Is there a ghost in my room? I certainly hope so. No, don't you put that juju on me, Ricky Bobby. Nice Hash says, they might have picked a real bad coin. That is certainly possible, man. Pump it, baby. Thank you so much, Bob the Builder. Good to see you, brother. Did I see the David Icke and London Real podcast? Listen, I am certainly not a conspiracy theorist guy, but I do like David Icke, right? He is entertaining. Just like you like Eddie Bravo, just like you like, Eddie from the Joe Rogan podcast, right? It's like whether or not you agree with him. It's certainly entertaining and eye-opening, right? But no, I haven't actually watched that one yet. It's on my watch list. I probably watched about, well, I didn't watch anything. I read probably about 2 hours after last night's show. I read about 2 hours on just refreshing my knowledge about Mimblewimble and Grin and Beam. Thank you so much, Bob. I do try my best, man. Do try my best. All right, we got another question here. Oh, by the way, let's. Did I drop those lemons? I did. I dropped them hard. Ricky T, the Pie Guy, Robin from the Hood, Mr. Ether, and the Squeaky Tadpole, my brothers. Hey, what do you know? You guys complained about the restream, and now it's working. I looked a little spooked, and something fell. I started to get a little spooked. Wayne Art asked for Ethereum Classic. Let's check it out. USDTG. Coming to an exchange near you. Coming to an exchange near you. Ethereum Classic USDT. We're not quite overextended, right? Like this isn't my favorite area to take trades. Like we certainly have some room to go. We're at 46.48 on the Mink scale. OB level, or OB4 level is up at 75. So I'm certainly not concerned that we're too overextended. Water explosion is good, moving up positively. Make sure we're on the daily. Yes, we do have rising explosion levels, so volatility is increasing. This is good to see. Parallax is bullish. We have parallax confirmation, nor are we overextended on parallax as well. We're also above the breaking Bitcoin initiator and above the continuation filter. Now, are we in range for a continuation trade? No, actually, if we looked at the close of the previous daily candle, we were. So N bar rule, this is good for entry in my book. Let's take a look. Let's see, just look back to the last few bars. Volatility should be fine, so we don't need to adjust for a custom ATR. If I were to take long risk on this right now, I'd be looking at $6.17 from initial take profit. That's where I'd move my trade to a no loss situation, shooting for a max target of 718, managing risk at 493. That's the way that I would handle that trade. I don't see any exit signals. Yeah, everything is firing pretty much on all cylinders for me for Ethereum Classic. Trading against Tether on the daily chart over on Binance. This does look like a good asset because, I mean, we are good here. We're looking for continuation. We're looking for kind of any reason to get long. We do get this powerful signal from Wadatar out of range, the continuation filter. And then on the next bar, we get this nice pullback. And you can see that it's actually closing on green, letting us know that we're in range. Now, we're currently not, but you can push the follow through. That's the N bar rule. You're good to go. CV19 is fake, and all these deaths are from 5G. Not drinking that Kool-Aid. My favorite conspiracy theory is the idea that we exist in a ball of gas. We breathe a ball of gas, and we live on a flying rock orbiting around a blazing flame, a blazing fireball, and at any moment we get hit by an asteroid. Aliens could come in. I don't really believe in aliens. I think that's silly. I think Fermi's paradox is pretty, I think people actually research physics can see that there is some good evidence that alien life does not actually exist, that there's a good probability that alien life doesn't exist. But anyways, we're flying around in infinite space, potentially infinite space. We're on a fireball that wants to kill us, and it seems like everybody wants to kill each other. And that's totally okay. I think that's the biggest conspiracy. That's okay. That's totally okay to just like not talk about and gloss over in modern conversation. That's my favorite conspiracy theory. The Hall moving average multi-time frame feature, game changer baseline for my system. Thanks for the advice to backtest the Hall moving average a while back. Works like a freaking charm. Well, good to see, Tyler, man. That's awesome, dude. I'm very happy to hear that. I did it again. There's a ghost. Just went long on hot USDT. Praying for recovery on that hot trade, man. Yeah, hot should still be in single sats, yeah. But the USDT, so the USDT pair is just so much more attractive to trade because you can market enter and out without getting slipped one sat, which is what, 20%? Yeah. Be careful talking about insert word here, says Bob. Tim Pool said that YouTube is banning videos of people talking about insert word here. I mean, they don't like me anyways. So there's almost nothing that I could not say or do say that YouTube wouldn't be like, we don't like that guy. In fact, just me saying the word YouTube is likely going to get this video demonetized, but hey, it is what it is. We looked at Ethereum Classic for Wayne Arndt. We responded to Mr. Yassine. It is 10:10. Ali wants to look at Litecoin. US debt. US debt. coming to a local bank near you. Same thing. This looks very, very similar to Ethereum Classic, right? And actually, what's interesting, right? So Litecoin's actually not going to be giving me a signal here just because of distance from continuation filter and distance from baseline. But the close up of the continuation filter. So the long signal was actually over here. So, again, if I'm using the N-bar rule, which I feel more comfortable about doing on USDT markets, but look at all these are, do you see this green list right here? So I'll speak purely to the technicals of the chart, but it's impossible for me to remove my bias on, based on how many positions I have open. I mean, I have quite the extensive hedged portfolio open right now, right? I'm not going to lie. That's all the trades that I am in on the right side there. But looking at Litecoin USDT, I mean, the initial long signal was generated. Let's find this baby. Here on this candle. One could have gone long on this candle right here. Boom. So then we have rising volatility. And that filters out all these bad losses. That's why volatility is so important. Here's the initial entry. Breaking above the continuation filter is a re-entry signal. But, I mean, we are far, far away. Now, continuation trades, we can ignore the baseline qualifier. We can ignore a lot of things, right? So I think there was valid continuation over here. But looking at how we're now trading at 46.39, this is one I would stay out because you can find a chart. I mean, I'm a technical trader. So you can find a chart if most things are going to get, if most altcoins are going to get continuation here. And again, if we look at Bitcoin dominance is in a downtrend. Like I talked about this last week. I talked about it yesterday. Bitcoin dominance broke the bullish trend. Everybody has access to the baseline who's a premium member. You can see it break the baseline and trend to the downside. And that is your signal to let you know that if Bitcoin's price is bullish and Bitcoin dominance is moving down, there's money flowing into altcoins. If Bitcoin dominance is dropping and price is dropping, it's not necessarily more profitable. But that's when you can look at alt BTC pairs, right? Yeah, I mean, Litecoin and Ethereum are outperforming Bitcoin. And that's, I mean, you can see that from Bitcoin dominance. Like I have far more unrealized ROI on my Ethereum long than I do on my Bitcoin long currently. So yeah, this is not, I wouldn't enter long on LTCUSDT. The areas to have entered long was on the 17th and on the close of the 6th, right? Now, granted, N-bar rule, you can enter with 1/3 reduced risk on the current bar, 2/3 on the second bar. But as you're going to be able to find something that is like Ethereum Classic USDT, which is giving the objective signal, I mean, I would just go trade that. And it's more volatile, so. But certainly signs of strength from Litecoin, and this is something that I would hold were I in the position. Which, I mean, full disclosure, I do hold Litecoin, just not in a current trade. Oh, Ricky, you have no idea how much that bugs us. All right? All right, guys, listen, you guys are awesome. Actually, I'm long from $29.01. Shine on, you crazy diamonds. Just go see 20. Yeah, Mr. Ether's like, nice. All right, guys. With that being said, it is time to skivvy on out of here. Whew. That's not supposed to be there. Don't mind that. Thank you guys so much for joining me for another episode of Breaking Bitcoin Market Analysis. I, of course, am your host, Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. I hope you guys have a fantastic evening in the rest of your night. If you guys have any questions, comments, concerns, sarcastic remarks, or death threats, leave them in the comments section down below. We will be back tomorrow at 9 p.m. Central Standard Time for another evening edition of Breaking Bitcoin Market Analysis. Make sure to smash the like button, subscribe if you have not already, smash the bell icon, otherwise you won't get notified when we go live. And of course, follow us on Instagram and Twitter. We do post exclusive content you will not see anywhere else. Links are in the description for anything that you could possibly need. And I get better every night. And if you guys are beginning your journey toward profitable trading, you guys would like access to our mentoring, our indicators, our strategy building, our Pathways to Profit course, our community, everything that comes along with subscription, make sure to check out everything that we do at premium.krakencryptocurrency.com. Links to that and everything you could possibly need to grow in your personal life are in the description down below. I look forward to seeing you guys tomorrow evening, and trade safely as always, guys. Cheers.